You want to mute yourself.
Mute your mic. That shit's nasty.
All right. Let's see some Coke products over there, Carl. All right. So now we are recording, and okay. So let's open up a fresh chart. And let's use this one. So, this stuff. So I've been back testing this, and let's just throw a random pair on this. Throw out some names and some random pairs that you guys want to see. Let's see what we call it. GUGA USD Mexican. Let's look at that one. I never really traded that. Okay. All right. So we don't need the news right now. Just want to have. So the first thing I want you guys to do, and this will help you guys to understand, the bias for the week. Like, overall, this looks like it's kind of consolidating, right, for this pair, but that's on the 4 hour, right? But I want you guys to kind of get a better idea, because I think a lot of people get confused about which direction they should trade, and, if they should buy for that day or sell for that day. And, a couple ways to kind of help you guys to get a good understanding about what to and how to choose the direction that you trade in. So this is going to be covering that process, right? So the first thing you want to do is hop to the weekly. And then from the weekly, take the opening price, right? And pull it over to the next week. So for this week, this is the opening price here. This is the next week, right? Let me make that a little clearer so you can see it. This looks like it's not a long, or this doesn't look like it's very relevant, because again, we're looking at weekly candles, right? Take the next line, you're gonna do the same thing. This is the week to week line. And we'll take the same thing over here. This is it going into next week, right? So this is our weekly look. This is where the week opened for the beginning of the month, the second week, and the third week, right? We're gonna go to the daily, and I won't do it for all of these, but I want you to take the same approach for the daily as well, right? So this is the daily. for that day. This where it opened for this day. This where it opened for this day. And this where it opened for this day, right? And let's grab this last one. Open was here that day. And we're gonna go down to the hourly from this point. And I want you guys to pay attention to this, right? This was the open for this day. Move this over. Here. Okay. So now we got the entire week, right? And 60. We got the entire week lined up, right? And this line, you need to consider this line right here, because this line is the weekly opening price, right? And if you understand how a bar candle looks, where you zoom in, some of you guys may have not seen one of these before, but this is where it opened. This is where it closed. On a bullish candle. On a bearish candle, this is where it opened. This is where it closed. The manipulation, if it's a bullish candle, is happening at the bottom half. The manipulation for a candle that's bearish happens at the top, right? So keep this in mind, right? So if we're looking at the week, the price opened here, it pushed up. This is where the manipulation for the week happened, right? And then the market expanded all the way down to this low, right? And from this low, we got consolidation and we had the close out here. So if we think about that, right? And we were to redraw this, this is what that candle would look like. The opening price here. The expansion to the top where we had the manipulation is here. The expansion to the low is here. And then the closeout on this candle is here. And of course, all of this is red because it's in my case, it's bearish. So okay. So when this week opened up, price pushed down and immediately closed above. Price closed, pushed down, but so traded above the opening price. And this day, from Sunday till about Wednesday, we should expect to get our high or our low created between Sunday and Wednesday, right? That's our first 3 days, right? And you should get your high or low created between not London or New York session for the entire week. For the entire week. So in this case, our high was created on the 15th. That day was on, let me make sure. Let's switch back over to the candles. This high was, let me drop this on right quick. And we can hide this. Oops, not you. The high was made on the 14th, and the 14th was Monday, I believe. Yep, it was made Monday, and this was made at this one was made in this case the high was made in Tokyo session, but it was actually initially made over here, and they pierced it over here. So the high was really made on that Monday at New York session right here, and we just had a little wick above it, right? And then the rest of the week, the price opened up, pushed down lower, made this low right here, and then pushed above the opening price. And then that's where we saw the market manipulation right here. And then we got our expansion to the downside, right? Now, we're looking at this from a weekly view, right? And we saw that this high, we trust this high because it was made on a Tuesday, Wednesday. The valid the high is more valid when it's made on a Tuesday or Wednesday, because Sunday, Monday highs can and are likely going to get broken, right? But they are still valid. But when you have a high or a low that's made on a Tuesday or a Wednesday, that's more valid because there's more trading volume during that time frame, right? So like this high, we will want to pay a little more attention to this high right here, because this high was made on a Tuesday, right? Just like if we were in a bullish market right now, this low right here would have been the low we would wanted to have paid attention to, because it was made on a Wednesday, and it's pretty much, it pierced down below to make this lower low, but we're in a bearish move right now, right? So we wouldn't want to take the trade off of these lows unless we were looking to take a short-term trade, like this move up right here or this move up right here, because overall we're bearish for the week because we're trading below our weekly opening price, right? Now, that's applying it to a weekly perspective and understanding how we should be looking at the market for the week, right? And now, once we're ready to start getting into our trades, right, we could take this same approach and apply this to our daily as well. And this will help us get into our day trades, right? And understand what direction we should be trading in throughout the day, right? And not so much to give you the perfect trade or perfect direction, because sometimes this will won't be the case because of news, because of other things, events, like that. But overall, this is the general sense of every market we trade in, right? So what's going on with this? Refresh. All right, this is the general sense of every market. So this is the week so far. Now we'll look at the day, right? So on this particular day, we'll look at the high day, right? The day we made the high, if we take the same approach that we took on the weekly, the price open up here. The market immediately traded above the opening price, right? Here, and gave us our high for the week, right? Once we got our high, the market, we know we're already near highs, right? So if we are already above highs and the market pushes up above the opening price, the likelihood of this trading above this decreases. And then we see that it immediately rejects these highs, right? And once it rejects the highs, the market expands to make this low right here. Once we make this low right here, we made our high for the day right here. This ended up being the high for the week. We made our low for the day right here. And then the market closed out right about here, right? So if we redraw this, right, and we consider what just happened and took place, the market opened near highs and pushed up above those highs. Once it pushed up above those highs, rejects those highs, and then the market expands to the downside, right? Now, this is for the day, right? And the way we can look at this is now we have a general sense of the direction of where the market should go. And once we have that general sense, now we can look for setting up what is the best trade entry for the day, right? And whether we take a rejection from the high or whether we take a breakout from this temporary low, we can feel a little more confident in taking the trades that we are entering, right? So if we are the type of person that want to get in near the high, right? We could have had, let's get rid of this. If we're in the market during this time, right? We could trade the break of the opening price. That's one way to get into this trade, right? Here's the break below. Here's the retest, and we end the drop from here. That's one way to get in this trade, right? And even if you got into this trade and you only took it to this temporary low, I don't know how to count the pips on this, but this is 12. I'm gonna assume this is 120 pips. Hugh, that's how it's counted.
Yes, sir.
So this would have been 120 pips on this drop right here, right? Okay. So that's one trade, right? So let's look at that. got this trade, and this trade would have had optimal trade entry here for the first attempt. OTP, optimal trade entry. That's the term I'm going to use for this. Then let's say we missed this because this happened at 23, that's 11 at night, right? So for people that trade the Tokyo and Sydney sessions, dang, Bitcoin just took off. And I'm in this trade too, dang. Cool, cool, cool. So this would have been the first optimal entry. Now you got a temporary low. This temporary low is important because this happens during London session. So you know also now this is also an area that you may consider to sell from as well, because this low is important because this happened between London session, between 2 and 5 a.m., right? Where this low was created. This low is a lot more important throughout this day because London has new volume trading. There's new traders in the market. And this particular low that was made by a made during the time frame when there are more traders determining what's going on in the market, right? So you need to note this low. This low is the London low. Right? That's important. Now, from this London low, we trade back to the opening price. This is happening between at the New York opening, right? And this could be your optimal trade entry here, the next optimal trade entry on these two candles, where we've already traded above, we created a low, and now we are trading back to the opening price and it rejects the opening price. So we can be a little more confident that whether we take the trade from the top, we take the trade from the top, or let me copy you. Whether we take the trade from the top up here, or we can take the trade with breaking retest strategy when it breaks our London low right here. So we would have had 3 great opportunities to get into this trade just by considering what happened on the opening price and how price traded. We had confirmation of this trade because we're trading near highs right here. We're trading near these highs. We open near these highs and we push up and reject. So even if we're not confident in entering it here, we had one opportunity to take it from the top. We had another opportunity once it broke below the London low. And then we would have been in the trade for a maximum potential of 300 pips on this trade. 347.8 pips for this trade. And if we got it all the way from the top, maybe we being real aggressive, we would have got an additional 20 to 30 pips almost. Okay. So that's, and this trade actually set you up in a manner where you didn't even have to, if you got in this trade during, on this day, on Tuesday, you could have been in this trade for the rest of the week, almost the rest of the week, until we got down to this low right here. You would have been able to leave a partial into this trade all the way down to 19, or, you know, around this area right here. Because if we repeat the same process, right, for the rest of the days, you would have got a similar result, right? On the next day, let's move you over here. Trade closed out here. On the next day, we already know we bearish already. So if you missed that trade, you would have had a little chance to continue this. But again, because what happened on this day, similar to what happened on the other day, price opens up, pushes above the opening price. This rejection comes, our high, temporary high comes here, or at this high. And then it trades below the opening price for London, right? So London gave us this low. We need to annotate this price. And on this particular day, let me copy this. On this particular day, though, however, we open up and we know we are near lows, though. So we have to take a different approach on this particular pair, because, I mean, on this particular day, because we found a low that's near previous lows, right? And what we also did in this case was we pushed down near the previous week's low opening price. Put you on to the right. This is the previous week's opening price. The market came right back down to our area that was near, an area near the previous week's opening price, right? So we need to keep this in mind, that if we do trade near this, we're in the area where we could potentially see a reversal to the upside, right? So that's why we don't continue to sell right here. And if we do continue to sell, it needs to be above opening price for the day, right? So in this case, if you look at the trade that you would take on this day, you would have potentially been bullish on this day, because in this case, opening price traded above, it created the Tokyo session high right here, and then it pushed down and sold off. But London, when the market brought in a new set of traders to consider, with the volume of traders increasing, it gave us a low for the day right here. So if this low continues to hold, which it did throughout London session, we get to our New York trading session. On the opening of pre-New York, we would have had an opportunity to take this for an optimal trade entry for a buy in this area right here. Right. So optimal trade entry for the buy in this area, right? If you miss this, right, you know, again, that if you miss this, the high that was made through the London session, the present high made through the London session was near the opening price of the day, right? So let me annotate this daily opening. And let's see, you can see it. Okay. The next time you could trade this is, in this case, you could take the break of the opening price right here. You would have got a little trade out of this because you only traded from this to here. But in this case, because we're near this low, you can understand that I could potentially take and set a buy stop here to trade it up, but know that by taking the trade from here, that we are in an area where it could potentially reverse. But you also know that it will expand above the opening price. I just need to lock in my target sooner, right? And if that is not the stance that you want to take on it, you may still be bearish during this time frame, right? Because again, we're in the downtrend. If you stay bearish during this time, you'll have your temporary high that was created right here for the day. And the next time we trade it back up near this, we got a rejection here. So in this case, you still want to be bearish and you get optimal trade entry right here in this area for the rejection, which in this case is trading near a previous low, a previous higher low right here. And we got imbalance in this area, right? So we got a lot of confirmations that line up with us still taking this trade from here, even though we see it going up, even though we seeing it push up, right? And then just in the moment, maybe you don't feel comfortable taking this from that point at the top, you have an optimal trade entry here, trading the break below the opening price, and you can continue down for this trade, right? This would have gave you a few entries in both directions for the day. If you take it from this low, say you take it from the low or take it from here, you would have got 140 pips from the low. If you take it from the highs for that day, you would have got 161 pips, or you can continue to hold and trade into the next day and you're getting 263 pips off of this trade. And then the day for you in this case looks still bearish, right? This particular day looks like this, where we had an opening price push up slightly above. It pushed down, the market pushed up above, and actually it finished up like this. Then the market rejected the highs and expanded to the low, right? Once it made its low during London, it rejected, retested above that, and then finally closed out near or around this area right here. So that's what that day's candle looked like. And it closed out pretty a little lower, close to the lows, right? Now, the next day, we had similar situation. We still bearish, right? So we still bearish, but we also keeping in mind that the this low is near, has pierced the previous week low, right? So if we pull this all the way over, we can understand why this happens, right? We'll get a better understanding of why this low happened here, right? And not just saying, oh, it's a key level, it's a key level, but what is the relevance of this key level? It's the previous week low, right? Market, in this case, on this day, opened up slightly, immediately pushed above. It gave us our daily high during Tokyo. Gave us our daily high during Tokyo and never pushed above that, right? Then during London, again, gave us our low right here.
Yo, Corey, would you say the safest entry would be to just wait on the retest, like the 50% retracement, basically, of that first bullish candle there towards the bottom near the low?
On for a new entry.
Right.
Yeah, I'll walk to that. Yeah, I'll walk to it. This day, we know we need to slow down on the selling because we near the opening, the previous week opening price, right? We know we got to slow down on this, right? But once we make this low, this actually gives us the setup to take when the market turns, right? Gives us the setup to know that we don't need to be selling anymore. We made this low near the previous week low, and now we can consider the change in direction of price at this low, right? We already pierced it, we held it, right? So if we trade in during London time frame, we get an entry right here for OTP,
You find my vector there.
right? We get an additional entry. We get a push up, right? So our first trade, if we take this near these lows, low to high, temporary high we made in New York, we get 125 pips out of that trade, right? Near this high. If we don't catch this, we get 1, 2, 3 entries near previous week's high, previous week's opening price, and 50% of this imbalance candle, we get entries off of that same area, right? All in this area right here, where if we draw this out, those will be our entries right here. If we don't take it from this low, right? And taking it from here, you're in the trade for the next day that moves up the market almost 300 pips. You even got another entry based off of the opening price for this day, right? The market opened up here on this day, pushed up, came back down to the opening price, rejected this. And if you miss this, if you miss this, look, you got stupid dumb, like way too many entry opportunities. Just by understanding like what's actually going on for the day. Here's your next entry right here. You miss that, right? Next entry, right? You miss that for this day. You miss this, next entry, right? The low for the day was created during New York session. Right here. Right. There's your entry right here. You missed this low. You got another entry inside of this candle right here based off of this candle that you could have taken right here. So you have mapped out the entire week of your trades right here, right? And on, you know, again, another higher low. That's where we traded to. We trade into a higher low from this area. We traded to an imbalance in this area, and we feel that imbalance. But if this continues to push up, now you're in a trade that has potential to be a trade that you can just sit and let go. And you just partial along the way, right? And you don't have to take as many trades during the week. But if you want to, you had the opportunity to trade from the low. You had an opportunity to trade from the high over here. Just by understanding this, right? And mapping out these kind of situations. Let me screenshot this to you guys. So when you open up, when the market open up for the week, note that opening price for this, right? And between Sunday and Monday, pay attention to where the high is created or low is created during that Sunday to Wednesday time frame. If it does give you a high on Monday, make sure that you focus on the fact that there could be a higher high or a higher low on Tuesday, because that's when the majority of the trading volume comes back in those days, right? And then keep in mind how the market is going to react to that opening price for the week. Okay?
Yep. But Corey, you're so right with something what I analyze what you're while you're going through that. Because if you notice when they said reversal Wednesdays and Thursdays, right?
Mm-hmm.
So if you notice here, we start at a high, and then when you come down, and then you notice it, you go back up, and then everything reverses by Wednesday.
Yeah, that's how that's basically what we just went over. Yep. Everything fractal, right? The market fractal, meaning that what you see on the higher time frame is doing on the lower time frame. So if you look at this week, right, and then go back and look at the month, right? That was this week, right? If we look at the month, it's doing something similar to this same situation as well, where this is the third week of the month. The second week, we were down. The third week, the first week, we were up. We pushed down, then we pushed up, and then we pushed back down. So if we go back and look at this from a monthly perspective, we can see the same exact thing and take this same approach and look at it. So, I just wanted to go over this with you guys because, we can do another pair if you want. It's something that I implemented a couple of weeks ago, and it's made it my trades a lot more accurate and a lot more precision, a lot less drawdown. I think the last couple trades I took, the most drawdown I saw was maybe 20, 30 pips at the most. And the profit target ended up going like 300 pips, 200 pips on trades. And even when I do the other trades that I took, I think I saw 4 pips to draw down using adding this on to it. Because I don't like drawdown. I hate drawdown. I don't know about the rest of you guys, but
Everybody should hate Jordan. Man.
I hate it, man. I absolutely hate it. And if I
Drawdown is very unnecessary. That's why. I feel you.
Because at the end of the day, if you're patient, you shouldn't have to have that much drawdown if you're patient, right?
Great. Have you ever heard somebody say, "Oh, I love drawdown"? I just love drawdown.
I ain't heard nobody say they love it, but I heard enough people say they don't mind being in drawdown.
Oh gosh, I was just joking.
Those people are very patient then.
Yeah, I would rather just wait, because if you wait, you probably gonna get a better entry anyway.
Paid to wait, bro.
Yeah, you're gonna get a better entry anyway. So, if we look at SPX right quick, and I know I wasn't trying to talk about this, but
Corey,
hey,
what's the name of this technique?
weekly, your bias. This is just institutional bias.
Institutional bias. Okay.
Yep.
Thank you.
I already went through a couple. I already did your SPX, right? And let me hide some of the stuff. This was last week. Okay, I didn't draw it, but this was last week's circumstance, right? That was Sunday. This was the opening price for the week, right? We traded above it, right? We already know we bullish right now, right? This is the opening price for the week. Right? So we know we bullish, and we know the same situation. We were trading near a weekly opening price down here, right? So what does that tell us? We got a potential to reverse from here, right? And when the week opened, it pushed up, but guess what? This high was made on a Monday, right? So this was a temporary high. We focus on this high, but we don't validate it until Tuesday, right?
Tuesday or Wednesday.
Tuesday and Wednesday, right? Then Tuesday comes along right here. Guess what happens over here? We make a low below the opening price, right? Let me undo that. We make a low below the opening price. So even if you get into this trade down here, after you saw this huge rejection on Monday, you get into this trade, maybe you just getting into this trade to trade back to the opening price, right? But, you know, you trade back to the opening price and you see that it breaks above, right? You see that it breaks above. So this trade right
Continue.
here gives you OTP for the buy. Once it breaks above, closes above the weekly opening, right? And then you're in this whole trade for the rest of the week. You don't even have to take another trade. Or you at least back up to these highs right here. And now you don't even have to take a lot of trades for that week. You just got to manage the trade that you're in. So this happened on Monday, Sunday to Monday time frame. This happened. The low made on Tuesday. We got a continuation push on Wednesday. We got consolidation on Thursday. And then we had another entry to continue after we got this drop on Friday to continue for the buy. Even if you were trying to be a seller right here, you had a good entry on Friday morning. Even over here, taking these entries were decent trades, but it was choppy. So this works on every pair you trade. Everything that trades, it works on this. You can go back and look at whatever pair you want to look at and take this same exact approach. Take the same exact approach. And you got the daily. The daily over here, it didn't push below the opening. It immediately pushed up. So we know we kind of bullish right here. It give us the high of the day right here. And then it drops and retests the opening week price, the weekly opening price, and then it push up. On this trade, I called out. I should have told y'all to stay in this trade, but we only had like 20 pips of drawdown on this, and this trade for that day went 350 pips. And then over here, price immediately pushed up off of the opening, came back down, rejected the opening price. We got entries right here and right here for this trade to continue to push up. This day was a little choppy. The opening price was actually here, down here, pushed up immediately on the opening, rejects the opening price during what time frame is that? This was the 17th right here. This was London. Pushed down in New York. New York rejected. It pushes down during New York session to this to the daily open and then push up and then rejected the high. So this would have been a little choppy day. You could have got a couple of trades out of this, but it was really, really choppy that day. I didn't even trade that. I don't think we traded that day. And if we did, I think we took it from the top, and that was it. We took it from the top. So I'll send you guys this too. And I'll send you this one even better. Because that's the one I did all the examples and drew everything up on. Right here. That's Travail dog.
That's my dog. My fault. Damn, she way in the other room. My microphone might be too loud. Yeah. Well, Coco right here sleep on the floor, babe. So I think that's Jules. Yeah, please. Yeah, then you can close the office door. I'm sorry, my dog sleep better than I do.
He does.
Shit, I can't even get good sleep like that. I wish.
Where Coco?
Right here.
Come on, mommy.
Go with your mom.
She'll sleep too?
Yeah, they was putting me to sleep. They snoring.
Oh, and I don't know if y'all know this, but it's Travail's birthday.
Hey, why you putting it out there, Corey?
So that we can sing happy birthday.
Oh man, happy birthday, man. Happy birthday.
Happy birthday.
I'm Corey wrong. Thank you guys. I appreciate it.
Happy birthday, dog.
Yeah, that
Much
man.
appreciate
We
it.
turned 33.
34, man. I'm old. Who got that kid singing?
Naomi.
Thank you, Naomi. Tell your kid I said I appreciate it.
All they have to do is hear happy birthday. They start singing. Sorry.
I love it. Yeah, I appreciate it, you guys. I don't celebrate my birthday.
They were all in harmony too.
They were. All right. Man, future little singers right there. Better watch it.
Thank you.
They're gonna be singing for the Lord.
Hopefully one day.
All right.
Okay, Corey, I'm getting a strategy, but I'm not gonna lie. I'm drawing a little bit of blanks here and there.
It's okay. You got it back to this homework for y'all. This homework.
I like it. It gives another way of getting a sniper entry for sure. But I think I got lost when you was doing Mexican because I really trade the Mexican pair, so I was like, huh. But
essentially, like I told you guys, you take this.
And I think you got like all these little notes right there. So I was like, what?
This is to help you.
Corey, what does OTE stand for?
Huh?
OCD, man.
No, the OTE.
Optimal trade entry.
Oh, I'm sorry. Okay.
Instead of him just putting that sniper entry.
Sniper entry. You can put that instead.
Like I say, I got sniper, I got regular sniper, and then I got the 50 cal snipe.
I tried back testing it, but mine didn't come out so good.
I'll start over. Let's go look at gold. Let's look at
gold. Why we gotta do gold though, man?
Yes, gold.
I can't stand that little heifer.
After that,
she keep robbing me.
Can we do a regular 4X pair after gold?
Yes. Same approach.
I'm gonna do gold with you, and I'm gonna follow along. That maybe that way I'll make it click for me.
Follow along, okay?
Yeah, that's what I'm about to do. I'm about to turn all my things off.
Could you use the Could you use the watermarks to differentiate the different days? You could put that on it.
Yeah.
Oh, Corey, did you sign on? Did you save the settings for that we did yesterday for the days of the week?
Oh yeah, yeah. I got one.
There you go, bro. That's
Two,
right.
but I don't really want to use it, but you can do it right here.
Hey, yeah, it may help. It may help them. That's all.
What
This
what
may,
did Neil say?
He was asking Corey to place the little indicator showing which days of the week it is. But there's also an indicator how Corey has right here that breaks it down in days, and you can see it based off the background color.
so this Sunday, Monday, this Tuesday, this Wednesday, this Thursday, and Friday is white.
Goodness gracious.
Too much for you, Miss Tate?
Yeah, she's.
Well, with this strategy mistake, you're gonna need to know those days because these are important days.
But
So you want me to do the great thing too, Corey, as I follow
no,
along?
you don't have to.
Okay.
You don't have to. You just need to know where your weeks are. And if you don't want to use that, or if you want it, I mean, you don't have to use it. You can just go to the weekly chart. Go to, let me clear this stuff off. You just go to the weekly, right? You draw a line from the opening to the next week candle, right here. You draw the next week candle. The open was right here to the next week, right? And then you draw another line from this opening to the next week's potential opening area right here, right? And if you want to make sure it's precise, you just go to coordinates, get the opening, make sure that's good. Coordinate here, all good, all right? So these are your weekly prices right here for the week, right? And then you drop down to daily and you do the same thing. All right. If you're confused about your weeks, right? This week closed here. That's the weekly separator, right? This week closed here. That's the next week. Then the next week closed right here. So now you got all of your weeks separated, right? And that's the opening of the fourth week will open over here, right? So now that's week 1, week 2, week 3, and we going into week 4 over here, right?
I'm sorry, can you go back to what you were saying about the day? I was trying to put the lines in.
If you go to the weekly,
You move too fast, Corey.
each one of these are weekly candles.
Those three.
These 3 are this is the month of December, right here,
Week 1,
Here.
week 2.
and here, right? You're gonna draw a line from this opening to the next candle, right here.
They open at the bottom.
And if it makes it easier for you, you can just name that week.
So I'm not drawing lines under the candles. I'm just drawing from like the grid line in the back of the candle.
No, you want to go to the opening price and take the opening price, draw a line from the opening price to the next week.
Or use the bars.
What's that?
Maybe that'll help them. The bars.
Yeah. Let's do that. Yeah, let's do that. It'll probably be a little easier. All right. So for this week, this is the opening price for the week right here. take your line, draw from this area, from this to the next candle. This week, the opening price was down here. You're going to take the line, draw it here. The week opened close to that week, so you can't see it, but this is the week open over here. So the week open should go right here. And now you got each one of your weekly opening prices, right? Here, here, and here. We don't have a weekly open for this week yet because the market haven't opened. So now we want to wait, right? Then once you got the weekly opens, right? You can do a little simple. Once you got the weekly draw, the openings already marked off, to separate them, right? You can just take a vertical line and just put one here, put another one here, and then put another one here, and just put another one here. Those are your 4 weeks right here for the whole month, right?
Well, back up. I ain't gonna lie, I just got lost. My fault, Corey.
It's
I know
okay.
we got the weekly candle off of the November 30th, and we got the 2 weekly candles off of December 7th and December 14th. And then you went up and you started saying you could put a line here, here, and here, and here. I kind of got lost right there.
This is the candle for that week. This is
Right.
the candle for that week, and this is
Right.
the candle for that week. You
Right.
put your line on this candle, your vertical line.
Oh,
and
the
that-
vertical line. Okay. Okay. My fault, bro. I got you.
You just divided them now.
This just divided all of the week.
Yeah, I got it.
So now, once you got it divided, right? You can go to the daily and you do the same thing, right? So for this day, right here, this is one day. This is the next day. This is the next day. This is the next day, right? Same thing, right? We're gonna look at the current week. This is that day. This is that day. This is that day. Then this is that day, right?
So I'm only drawing vertical lines now.
Once you want to get the days,
Okay.
right? And for this particular day, for this particular week, the opening price was here for this week, right? Then the next day, opening price for this day is here. Now, you don't really need to get an opening price for Monday because Monday's opening price is going to be the weekly's opening price. That's this whole line we drew across here. The next day, opening price was here. The next day, opening price was here. And then this day, opening price was here, right? So now everything is chopped up, right? Everything chopped up. And you can go to the hourly, you can go to the 15-minute, any one of the lower time frames, and now you can get you can interpret your bias, right? So we can go to the 1 hour, and we'll just look at this particular week. So on this week, price pushed below the opening price. It gave you a low right here. This is a Sunday low, so again, we don't know if this is valid, right? But if you look at Wednesday, what happened on Wednesday, we actually got a push above the opening price. We made a high, and then we came back down to retest near the opening price for the week. So what do we know? That if we break above the weekly price, we broke and closed above the weekly price right here. If we push back down there to the weekly price, opening price, we know we can take a buy off of this because this buy is correlating with the weekly opening price down here. So you got a trade that you could have got in here during Sundays, this is Sunday's New London session right here, that if you get in this trade down here, you in for the rest of the week, and you looking at a potential of 768 pips for this trade. Just understanding what's going on from a weekly perspective based off the opening price of the week. If you miss this down here, you got another entry opportunity off of the next day's opening price, which correlates to this area right here, where you could have got another entry, sniper entry right here. You missed that. Down here, it comes back up, rejects, and pushes up from here. If you miss this down here, you got a break and retest of the opening price for the entry that continue up from here. If you miss this day's trades right here, you had another trade you could have took, even though this would have, you could have closed this out in profit, but it wasn't the trade to get you in for the rest of the week. Because remember what I said, this low is good, but it was made on Sunday. This high is more important because it was made on Wednesday. So we get this high that was created above the opening price, and now we push and trade back down near the opening price for the week, and we get a rejection to push it up from here. Your trade, your optimal trade entry for this whole week is down here in this area. In this area right here. And then you got an additional area right here for the whole week on gold. This would have been 2 trades you would have took the whole week right here.
What I should get.
2 trades you could have took. And then you would have even known, all right, if I made this high, it's on a Wednesday, I could even trade that for the rejection if I wanted to. Or you know that you could trade this for the rejection if you wanted to as well, right? And you know that because we've already pushed down below the weekly opening price. And this is where the manipulation takes place, right? So now we know that the market made its low. We should expect the expansion to the upside because we bullish. We get our high. And once we get our high, we know we got to get our distribution to settle out the closing price for the week, right? and we did that, we got our distribution, we got our imbalance, manipulation, force to the top. Now we got our break above the closing price, opening price for the week. And then we got our expansion for the week right here. And then we got our retracement to calm down and pull us back. And now we got this. This what that whole week just did. This was the opening price. This was the expansion to create the high. And then this is where we settled right here. And we had 2 trade entries. And the good thing about this is we just looking at this from an hour perspective, right? We're looking at this from an hourly perspective where we can take these trades off the hour. We could have came down to the 15-minute and got entries even more sniper, even more crazier entries, right? So we automatically traded below the opening, right? And if we look out at the weekly chart, we look out at the weekly chart, right? We already see we near rejection and we reject it, right? So we know we're bullish for the month right now, right? General sense, right? Now we know we're bullish for the last 3 weeks for sure, right? The last 3 weeks have been bullish, right? So if I get a break below the opening price, if I get markets to hold near the opening price, I got a low right here, and I already know that I'm bullish the last 3 weeks. This low becomes relevant. Of course, you want to see this low made on Tuesday or Wednesday, but this low became the relevant low, right? And if you don't get in on this day, you had a break on Tuesday, right? We go to Tuesday. You had a break, but you had a break. The market opened up, pushed up, and then came down and gave you another low below opening price for the day. Here's your next trade entry. And this one becomes important because you see that prices already come down to this same little area right here quite a few times and pushed up from there, right? We had a low right here. We had a higher low right here, higher low right here, higher low right here. And then we got another higher low. And then we had the move up. Then we had the move up. If we miss this, again, this still Tuesday. We made a high on Tuesday. So this Tuesday high becomes important, right? We made a Tuesday high that comes down to reject the opening price right here. And then we push up again. Make another high on Tuesday. So this still important, but it comes back down and it still holds this area, right? And pushes up from here. So if you don't get in this trade on Tuesday, where you had entries from here, 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 and here on Tuesday, you come to Wednesday, price does the same thing. Opening price here, it pushes down. This high, this higher low is invalid because just like we consider the weekly perspective, right? Where the weekly perspective, this would be like looking at Sunday to Wednesday right here, where this would be the lower volatility time frame during Tokyo session, And remember, I told you how the market's fractal, right? From a weekly perspective, we don't want to look at what's going on during this session, right? Because this is the slow session. It picks up a little bit during here, which is equivalent to the middle of the week. And then the rest of the week, it just sets you up for the next week, right? So this is the same thing we would see on a weekly or a daily perspective on the 15-minute charts, right? Your Tokyo Sydney session is equivalent to your Sunday, Monday trading. Your Tuesday, Wednesday trading is equivalent to your London session trading. Your Thursday, Friday is the equivalent, your Wednesday into Friday trading is equivalent to your New York session trading, where you get low volume here, you get a spike in volume here, you get a pickup in volume here during these couple days and times, and then you get the closeout trade for the week, where they want it to go next from here, right? That's usually how you're going to see the more markets repeat itself, right? So if we look at this, right? Tokyo and Sydney, they start pretty much around here. London starts pretty much around here. And I would expand London to, we get to 11:30, 11:12, where we see London and New York cross, right? All of this happens during that time frame, right? And then once we get the cross at we get the cross, right? This is where we settle out for the end of the day to push us in whatever direction we're going to. So you need to backtest this. You need to look at this over and over on every chart you can look at, because this is going to tell you a lot more information than just drawing a line at certain areas, right? Because it's going to help you understand why it's reacting to the line at this particular day, at this particular time, and why your price is moving the way it is for the, for the day, when it's responding to something that's happening from a weekly perspective. We can't just draw lines and just say, oh, this is this is this or this is that, because yes, it's important to know what those levels are, but where are we versus the time of day, and day in retrospect to those lines, right? We need to know, like on Tuesday, if we near a key support level or key resistance level, have we made this high or have we made this low near that level? Because if we have, then we know we can take, even though everybody looking at this level like, oh, it's going to break below this, right? We know we could have took a buy right here. While everybody trying to sell, we could have been taking a buy right here and been in a 250 pip trade, right? Where you see that this low right here is made right here. Once you see this higher low has been made, this is your area you target right here, right? And if it holds this area, you take your buy and you get in this trade and you in for the rest of the month, rest of the week. You've taken partials here. And if it break above here, you let the rest ride. And you don't have to do nothing but make your money. Over here, it would have been similar situation, right? Your low was made here, right? Box off this body and pull this to the right. There's your entry here, 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 and then you in this trade for the rest of the week. You target the high back at the opening price for the week, partial here, and then you just let the rest ride. You in that trade. So if we look at another week, right? Look at this week. No, let's look at EU. No, this is newer people trading this. Look at EU, right? Go to the weekly, right? The weekly says we're bullish. We see that, right? All right. Opening price for the week was here. We draw a line to this candle, right? Opening price for this week was here. We draw a line to this candle, right? Opening price for this week was here. Draw a line to that candle. And then opening price for this week was here. Draw a line to where the next candle should open. Let me make sure it's straight right here. Right? You got your weeks. Now you separate it. Right? I'm just going to use this one. This week, this week, this week, and then this will be for the next week. Right? Now, come to the daily. You're going to do the same exact thing, right? What you don't have to worry about, though, is the opening price for the daily should be for the week. No, like whatever price we use for the opening for that day, I mean, for the weekly should be the same as the opening price for the first day of the week, which is Sunday. So we know we good on this price. We won't have to do nothing for Monday, but for Tuesday throughout the rest of the week, we need to make sure we get that. So for this day, we'll start at this week. This was the opening price for this day. Stretch it to this day, right? This was the opening price for this day. Stretch it to the next day. This was the opening price for this day. Stretch it to the next day. Then this was the opening price for this day up here. Stretch it to the next day, and you're done for that week, right? And you should probably do it like this to start, even though you can use indicators to do this, because this helps you understand it, right? And then you want to separate the days. This day is one day. This the next day. This the next day. And then this the next day. Once you do that, you can drop down to any time frame you want to trade off of. You want to trade off of the 4 hour? Cool. You want to look at the 4 hour day chart, right? On the 4 hour, same way we looked at the 1 hour, the 15-minute. On this day, this gave you a temporary high, and then it drops down below, right? This is our Tuesday. This is our Monday area. Let's do an hour. Let's do the hour. That's going to be a clearer picture. Right? So this is Sunday, Monday. The market opened up, and eventually on Monday, it trades above it opens up and trades above the opening price. It gives us a temporary high right here on Monday. Remember, keep this in mind, but make sure we understand that this high is valid, but we need to make sure that it's confirmed on Tuesday and Wednesday, right? Then we see that this high isn't valid because from this high, we trade below the opening price on the week. And this gives us, on Monday, this gives us our low for the week, right? From here, we can start to consider entries, right? Because I'm pretty sure that one, there is a close or a high or something right here, right? There's a close over here for the week up here. So we already know we below last week's close price over here, right? We push up right here and we see we still bullish because we break above the opening price, reject the price. Here's your optimal trade entry. Here's your sniper entry right here. And you got confirmation that this gonna keep going because we broke above the weekly opening. So if you can't get in down here, that's your entry right here. This happened, this high happened during London, this held during New York. Your entries over here at 8. If you missed this candle, you had a re-entry candle right here at 9. You had a continuation candle at 10, and you get in the trade right here. If you miss this, right, the next day, price open up, push below, push above. You get a temporary high during Tokyo session, Sydney session. You get a high made in London, right? You push down and then you get temporary support all during London. So we holding in this area. But in New York, now that we've held this area, right? You mark these lows. In New York, you see this higher low was just made. This is your entry right here. You mark this, the point that these lows right here were made, right? And you understand that these lows, this higher low gave you your entry, and now you're in this move right here to finish out the week, right? So even if you miss this, break above the weekly high, you got expansion starting from here all the way up here, right? So this week you would have had 213, 15 pips off of this if you took it from there. If you take it from the low, which you could have done that too, because again, you take these lows into account that were made, these temporary lows that were made right here. Once you see that you just got this higher low right here, box that in. If you want to take break and retest, you could have took the break and retest from here. You could have took the wick rejection from here, and then you end the trade from down here all the way up here. And that's 250 pips. And then your first target would have been, you know, all right, I'm gonna take a big partial right here because I know that I'm trading back to the week opening. And if it continues, I still got a partial in from here. You never have to move your stop loss after it breaks and pushes above here. You could have put your stop loss right here. And guess what? Not only are you in this trade for the week, but if we keep scrolling to the right, you in it for, you can still be in this one trade that you took right here. And even if you missed it right here, you had an opportunity here. And now you in this trade from these lows to the high that it made weeks later. And that's 350 pips off of EU. With the next week giving you multiple entries to get into this part of it. So not only do you have, you could have had this trade running, but not only could you had this trade running right here, but you also could have got a re-entry right here and had two stacks, huge stacks right here and right here for these trades where you took partials and then held trades, held pieces of these trades, right? This week, you would have had your higher low hold up on Monday. You don't make your high for the rest of the week until Friday. And you would have been in this trade and just chilling, right? Just chilling, right? And if you want to day trade in between all this, you know, all right, cool, I got a high. It broke above the weekly, the daily opening price and gave me a high and rejected. Cool. Next candle, I can get in on this drop. That's a good 20 to 30 pips right here too. Right? Or, you know, if you don't do that, you got drops here. Once, you know, Friday we made the high, right? So that means that on Friday, this is what's, if we looking at it from a bar perspective, right? We know this was our opening price. So we already made this piece of the candle. We already did this and this. We already did this part, right? So we know we need to make the other side, right? We need to make the other side. So this was our opening. We haven't made our close, right? So if you wanted to take this sell after seeing we made the high right here, you could have got the sell that gave you the close to here. This is where the market closed right here. Actually, it closed a little lower. It closed right around Thursday's opening. Right here, closed right at Thursday's opening. So from this high to where it closed out, that would have gave you another 50 pips, 60 pips off of this trade from the high to the low, because we needed to make the rest of this body right here. Right? So I'm gonna be honest with you guys, right? I'm not really trading a lot more for the rest of this year. Like, all I'm trying to do right now is perfect this and make sure that I know how to use this strategy. because, you know, like I said, I don't like drawdown. I'm gonna take one of Wale's slogans: patience, discipline, and precision is all I'm focused on right now. Like, I will give up trades to get better trades. Like, I'll give this sell up to take this buy, or I'll give this sell up to take this buy. You know, I don't want to be, I want accuracy more so than I want a couple pips, right? Because I know if I get in accurately, then I'll get all the pips I need and want out of the whole world, right? And applying this, like, you can even get more confident in using buy stops, sell stops, pending orders, right? You can get more confident in doing that because you know and see the clear direction of the market, and not just, you know, is it pushing up? Okay, it's pushing up, but where is it going to push through? And if it's on a daily perspective, which direction should I be trading in? You know, where's the probability that it's going to trade on Monday to Sunday, right? Because if it opened up above this, right, Sunday to Monday, it opened up above the weekly opening price. On Sunday and Monday, it was bearish, right? Because it opened above the weekly, it opened above the opening price. So that gave the bearish outlook for this day, right? On this day, it opened above the price, but it held and it closed above the weekly opening price. So this gave us the bullish outlook, right? Just like this opened up, price pushed above and then dropped below and held below the opening price for this day. This gave us a bullish outlook because we're holding above, we're holding a higher low below the opening price, right? And we get an expansion from that point. So I want you guys to really, really like dig into this, right? I want you guys to honestly focus more so on trying to figure this out this week than you do trading. Even if you got some money goals, like, try to get your money goals too, of course, but take this into consideration. So that way you can become a little more accurate on it, right? On what you're doing, right? And you can be more confident. Like, if getting into the trades, right, you could take break retests, you could take rejections, you can take buy stops, you know, all day long with this, right? But if you don't really, really have a understanding of where things are going, then you don't know or feel as confident as getting in and out of the trades. I know a lot of people will get into trades and they'll see themselves in drawdown and they'll be closing the trades out sooner than they should, right? But wouldn't you be more confident if you had a better picture of what's going on versus just getting a general direction to say, you know, oh, this is going up for the, like, if we came on the weekly and we do top-down analysis, right? All we want to see is there's a rejection here and a rejection here, right? But what else do we need to see in between that, right? Don't we need to know, like, from a weekly perspective, where are we considering going, right? We also need to understand from a top-down analysis, you know, yeah, we got a trend, right? Being an uptrend, right? But throughout this uptrend, where are we potentially going, right? So that's what breaking it down, like I just showed you guys, will help you to understand. Like, you get the overall sense of the market from this way. You get your levels, you get your levels, you get your direction, but then you also need to come down and break it apart. like we just did over here. Break it apart so that way you get a better picture of how it gets to where it's trying to go. If we break down this week, we know where the week start and ended. This was the opening for this week. This was the opening for Tuesday. And even looking at the daily, right? And just drawing that line, right? On these 2 days alone, didn't price come back down to retest the Tuesday opening on Wednesday right here and then push up? Like we didn't even go to the lower time frames and we can already see a trade we could have took without even going into details, right? Just by considering this, right? Next day. Oops, hang on. Next day. Next day. And then this was the next day, right? Market open now. So guess what? We already got an idea of where to go. 29, 30, 31. What is the next week in? The first, right? So this is the next week, right? This week open on the 20th. Today is the 21st. So this is the opening for this week right here. We already know that we got price pushing down. Guess what else we know? We near high. All right. So this week already starting off to tell us that we want to go down, right? This week already just opened, right? EU just opened up at 7 minutes ago. Now we got the weekly opening price for EU already, right? And if we want to be more precise, we can hover over the line and it's telling you right here, right? So you got the daily opening, which lines up with the weekly opening price of 122. Again, you can get it from over here and just hover over it. So it opened at 122.563. I'm gonna copy that. We got the opening price for this week already, right? A close for this week is on the 1st, right? That's our whole week, right? 25th. Yeah, we got a couple of days we don't trade in between there. So this was going to be a little off. 24th, 25th. We don't have 26. So yeah, this is the 26th ends the week. Sorry. Yeah, this is the week for this week. So if you're trading this is your whole week right here, right?
Hey, Corey.
Yep.
I'm gonna be dropping the charts that Kim's calling out right now on IG Live once he's done.
Okay.
All right.
All right. Then here's the day. Here's the day. Here's the next day. Here's the next day. Now, lower time frame, 1 hour. The whole week right here. We got the weekly low. We trade above it. The whole week we trade and hold this weekly level 3 times right here across these. Guess where all of your higher lows are at this weekly opening price? You had 1 time to get in, 2 times to get in, 3 times to get in for this whole move right here. That end up going 146 pips on EU. That's good for EU. 146 pips on EU. That's super good. If you miss these entries, right? You get to Wednesday's high. Guess what? You know we bullish, right? You can even put a buy stop above this high because we're bullish. And you would have got confirmation because the price opened up below, created this low during Sydney session. You would have got an entry right here, and you could have just took it up from here for this small, right? But Wednesday gave you your trade right here. Tuesday gave you the trade right here. Even Monday, if you wanted to get in early, it gave you the trade right here. And each time you get even more confirmation because we trade above, we hold the daily, the weekly high, opening price. We hold it right here. Then we push up again, we reject right here. We push up, we push below, we push back up, we held it right here, and then we expand right here. So if you just get in on this trade in this area, you had the potential to take almost 100 pips off of just this area. If you miss that, you get your wick rejection over here, your wick rejection entry over here, where we blow through this daily high, but because this EU, we only saw 26 pips of drawdown for a trade that went 100 pips. That's pretty much 4 to 1. Four to 1 trade. So let me send this to you guys. And got EU we looked at. Said F them charts. As in, what was that? Wale?
Huh?
You said F them charts.
Man, look. Hurt feelings. Go to Bitcoin.
Oh,
I'm still hurt about Bitcoin.
Oh man, I ain't even gonna tell you, like,
I'm still hurt.
I got Bitcoin already worked up already. Let me go to that from this.
You know it's at 24, huh?
I was in the buy. I'm in the buy. But I just got pushed out. I just took profit though. And I just took profit because it wicked me out. But yeah, I was in the buy already. And I got a last little quick buy in too. Like now I feel like a Ginsu knife, man. Like I thought y'all thought I was Batman, but like I'm Batman for real. like now, you know. So I already had this drawn up, and I did this off of a daily analysis. Let me take some of this stuff off of here so you can actually see what was going on. So this was the opening price on Sunday. We dropped down, created this little temporary low right here, and we held over here. We made a high during the Asian session right here, and it held for a while. Then we wicked down below it, right? So guess what I did? Buy stop right here. It pulled me in. London comes back down. It pushes up to the opening price and it rejects. But once it comes back down near where my entry was, we got another rejection because we're rejecting these lows, right? We're rejecting these lows. And I could have got in another entry when it pushed up from here and then it expanded, right? So this ended up going, this one ended up going from my entry. This went 100 pips right here, and I got stopped out somewhere up there, right? I was under the impression that this, and the reason why I took this entry, which is, I know it's kind of high, but same situation is we still bullish, right? And as much as we want to sell this right now, we still bullish, right? You can't see through all this, but we still bullish, right? Overall. And as much as we want to sell this, right, we can't justify it yet because we still got candles that are going 300, 400, 500, even within this little range up here. So my logic for selling this, for buying it was, this may be to buy up to 25,000, right? So I just wanted to see if I can get in off of that. You know, if it worked, it worked. If it didn't, I still got profited, right? But this area that is buying off of right now, yesterday's opening price right here. This is yesterday's opening price that we found support right here. If you don't feel comfortable, guess what? This is higher. These are highs right here that are rejected off of, highs that created near opening price for the day before, right? That's why I was confident to buy from here. Even if I did, even if it does sell off, right? That's cool. You know, if it sell off, that's cool. I had the opportunity to hop in this sale from here and here based off of this same information, just in the opposite direction, right? This was opening price on Saturday. Price dropped down below, gave an entry right here. I could have been in from this low right here. And then if I want to take every wave, like I know one person on this call that would have been trying to take every wave, right? Low, higher low, high, you sell it from here. You got the same circumstance over here where your high was set right here. Your low set right here. You see price come back in here, your rejection entry, you could have took this. Your rejection entry, you could have still been in this trade and tried to sell it off from here. And you wouldn't have been
from where it was like 19?
Huh?
Did you do the analyzation of when it was at like 19? I did it further back. I'm ticked off because it was like, yeah, and that little consolidation. Where is it? Yeah, you did it. It's down there.
Mm-hmm.
Oh my God.
Like,
I'm so hot about that.
Dude, if we take this same approach, guess what? Our weekly opening was here. It pushed down below. It gave us a temporary low right here, right? Then we break and push above this to make a high. Guess where it holds up? Weekly opening price right here. And then from one trade right here, we would have been in all, and I'm gonna hate to say this, but
Still meaning.
I'm not gonna I'm gonna say this, we would have been in all this shit. Like all of this. All of this move,
Oh,
right?
God.
If and even the week before, look at this. Weekly opening price. It pushes down below. It holds at or around the weekly opening price of last week, right here in this whole little area. It held this whole weekly opening price. We had entries right here, here, here to be in it from 17,000. I didn't go back any further on this. I did, but I deleted it. But this was the 9th. This was the 4th. I did this area. I cleared it by mistake, but this gave us the entry right here to go in it from 14,000 in November. This week, if we took the same approach, let's look at it. 24th, 26th, 30th. So the 30th back to here would have gave us the week pretty much, where we would have saw the weekly open up, push down whole area, and then go. We could have got in at 16 using this same concept. So this tells the whole story and not just a level or a key level. It tells the whole story, the whole picture. Because some of us would be like, why are we trying to buy in this area, right? Why would we try to buy in this area when we see that we at a high, right? But isn't Bitcoin blowing through zones and all that kind of stuff right now, right? So if it's a likelihood that we try to get 25K at some point, being that we so close, and we already broke above this impulsive high right here from the huge move. So it's already proven that this high ain't valid right now because it's breaking above it, right? So if that's going to be the case, even if you get stopped out, you still take a temporary buy, take partials along the way when you see it reject back down, but leave something in so you can try to get it to push up to that 25,000 area, which is around here. If you sell it, like if you do want to sell it, right? Cool, that's cool too. But again, take partials, leave something in there, right? So if it does drop, which from a market perspective, this should have dropped already, but it didn't. And that's okay, right? Because we got a better picture of what's going on from a day-to-day basis, from a session to session basis, and from each different week. You know, we know where it's going on, right? So I'm just gonna send this to y'all. I know y'all don't understand this yet, and I won't go over that. I still don't want to teach that yet, but I'm gonna send it to you guys, and you can like read it, my notes, as you see fit, and you may be able to pick it up from there.
Corey, one of the traders use this in IML, man, and go live. Use those that's like a cloud stuff.
Christopher Terry uses this.
Yeah, but
Called session volume.
yeah, there's an ex guy. He trade early mornings.
Mm-hmm. And basically, this is I like I told. I don't know if you've been on a pre-New York session when I showed you the orders.
Yeah,
that's what this is. This, but it's on it's visually on the charts. Right, and
That's the thing that you were using from Robinhood?
from Thinkorswim. It's the
Oh.
same thing, but it just looks different. The orders are these levels. Like you should be able to zoom in and see the orders right here, but you can't. Sometimes it doesn't show. I don't know why. But if you zoom in, you can see the orders right here. You see? And you multiply each one of these by 100. And the yellow are up orders. I mean, the blue are the up orders, the yellow are the down orders. So in this case, on this particular area, we had 2,800 for buys, 52 for sales, 5,200 for sales in this area right here. If we go down, the area that had the most volume of trading so far for this particular day was right here. Let me go up.
The 54.
This one right here. 50,
yeah, 54, 50 something.
5,100 and 5,300 on each side, which gave you all together 10,400 orders were placed at this particular price of 23,473. This area becomes the value area. This is what fair value for this asset is right now, right? And the way you can use this, yeah, I'll just go ahead and teach it to y'all.
All right, you guys, I just dropped US 30 for you guys from Kim.
There's a couple ways you can use this, right? Where you look at the fact that this is fair value right here. If price holds this, you can take a trade off of fair value price. A lot of times the fair value price will line up with key levels, right? Of course, that's because this price is telling you where the majority of the orders are coming into the day, right? So if we get a break above it, we hold this, then that's telling you that there are more buyers trying to push this up. If we were selling, during this time we were selling, right? Up until we got to fair value right here. And once we stopped and got to fair value, you started seeing wick rejections in this area. And then you got a confirmation from this node of volume right here that we were going to reverse from here. Just like, even though it sold off from all the way up here, it came right back down to here. So this node made a low and then started to reject. And now it's back to fair value price right here. You can see the changes in sentiment by looking at this, where the majority of the trading volume of the day is here, and you have a shift in the direction of the market here and here. This doesn't mean that because this doesn't mean that it's buying or selling per se. This just shows you a shift in the sentiment of the market because we were pushing up until we got to this point. And then we start seeing new orders come in over here and create a node of volume right here until we got back down to one that we previously used and we saw rejection right here where we have rejection and the fair value price in this same area. If you were looking at this from another day, that was another day where this day is pretty bullish, I mean bearish, right? Fair value is here. The sentiment is to the downside, and you know that because we pushed down. But then we had a new node of volume that came in over here, right? And then that held this area, and we pushed up from there. We had sentiment change here. We tried to sell off, it held, and but it continued to go up for the next day. That's kind of how you want to, if you guys want to look at this, I'll go over this again another day, but this is a little way ahead of the times and curve right now. But that's the brief understanding. You got to understand the terminology first to kind of get to that point where you can actually use it. But like there's these peaks mean certain things right here. They define that this is a new node of volume, right? So this is not a fair value price, but it's one that you need to consider in this area. And then immediately we bought up from there. This node right here continued to buy, right? So confirmation, that's all you want to use this for is confirmation. You don't want to actually take a trade off of it, but you know, just like price pushed down and rejected, and we saw that another node was created down here, and we see the bullish engulfing candles, throw the order on, and you can be, you know, even if I trade from here back to the opening price, I would have got that trade. And then it came back down and rejected near fair value price, and then pushed up and pushed through the opening price for Sunday. And that's kind of how you want to look at that. That's how you can use this. You can use this as break and retest. So even if maybe you're not in a trade that's coming down or going up, and you got a zone right here, you can trade the break of the fair value price and get in the trade too at a good price as well. So today was a lot of sauce. Today was a lot, I know.
It's a lot for sure.
So
Yeah, but you
Now, the
recorded it,
first
right?
one we go over it again.
I did record it. I did record it. And then
Oh, okay.
what was your question, Naomi?
I wanted to know, like, if you are willing to go over it with us again, like as we follow you, but like slower, but step by step for the first strategy.
Yeah, definitely.
Okay.
Definitely will do that.
Corey, what I think, trust me, some of us here, I mean, you have to do like a PowerPoint for them so that they follow you step by step, bro.
I will open up I want, like I said, I want you guys to get I want us to be the best traders. I want us to be the best traders that ever existed, to be honest. And I want us to make all the money we can, and I want us to be stressless while we do it. I don't want us to be like amped up and like going crazy anytime the market opens, right? So All I'm trying to do is make you guys better and make myself better. And I'm trying to clear up some of this stuff for you guys.
Hey, is
So,
that rejecting off that low?
Thank you
Yep.
so much.
Wanna go back up?
yeah,
That's
Yep.
a weekly?
right here.
Mhm.
This is a 15-minute low.
Okay.
This is a 15-minute low.
But those wicks are telling you something, man.
Telling you everything. Telling you everything. So I want to see the opening price for before I take a trade for today, because this will give you the opening price for the rest of the week. Since we got about an hour and 30 minutes left on Bitcoin. Bitcoin open its days at 7 p.m. So we would wait for the 7 p.m. candle to open and then mark the rest of the week with that.
Corey the goat.
Very, very detailed today. So that's why I made sure I recorded this.
And I have
Because
watched this a few times.
yeah. So the thing I want y'all to do this week is practice getting your let me see. Practice where is that? Practice this part where you're just going through getting your
Weekly and so on.
weeklies and daily perspective this way. Just go through like and look at these little things. This is what this day looked like from a bar perspective. This is what that day looked like. This is what that day looked like. This day, this day, this day, this day, you know, and just kind of go through like we did before.
Hey, can you screenshot that one?
This one too?
Yeah,
Okay.
appreciate it.
And it's best to use the bars, right?
No, you don't have to, but you can.
Okay. No, baby, we're not going to Chuck E. Cheese. I didn't tell her that.
Like this and the reason why I'm encouraging you guys to focus more so on right now on this versus being in the chart is because the market's slow. Next week we really might not get into no trades next week because it's Christmas. And I mean, like I'll probably trade, but like I'm not really gonna be focused on trading because I'm gonna be spending time with my family, you know, and then we about to get ready to head out. So I'm not gonna be trading a lot this week. I might do one New York session, one pre-New York session this week. But even though I'm not trading, I'm gonna be doing all of this. I'm gonna be watching videos, I'm gonna be studying because I want to set up for next year so that next year is a 7-figure year, 8-figure year, 9-figure year. You know what I'm saying? Like that's where you dial in right now, right? Don't think of it as you dialing back because you're not trading. You're prepping, you're doing prep work.
Yep.
Doing prep work.
No, I plan, man. I plan that too, Corey. I wanna buy the bounce back add-on. I'm gonna buy the bounce back add-on.
That's a good, but that's a good addition. Like they go over some of the stuff similar to this too.
Yeah.
Because a lot of this stuff that I'm teaching y'all now, I got it from the person who taught them.
Huh?
A lot of this I'm teaching y'all now came from the people that taught the smart money people.
Yeah.
So.
Well, thank you for teaching it to us.
Mhm. And those people took what they learned from him and kind of added their own style to it, right? And it's great. And then this way, you guys can understand this. If you can understand this, right, you can apply it and add it to what you understand in your own understanding. And like you can break and retest, you can do all that other stuff. But now you can do it with a little more confidence and a little more understanding of what's actually happening on the charts. You guys got this one, right?
Corey, where are you dropping those training? Where are you dropping that at?
The links for
Those
this
charts. Where are you dropping these charts?
in the chat for the Zoom.
In the chat?
In the Zoom chat, but I'll put them inside of the team chat too. I'll put them in both.
So Corey, once you leave, are you still going to be doing team meetings, or should we look for someone else to do team meetings?
No, I'm still gonna be doing it. It's just gonna be in different time zone.
Okay.
I might change it because I think it's like this is like midnight or something over there right now. So I don't know. I might change it. And I don't know. I gotta see how the time turns out.
One day I'm going to be like that, Corey. Just get up and go.
I hope so. Right. So record this.
Corey.
Yeah.
So essentially, I mean, I'm not gonna say it's arbitrary, but you can just go from the opening, draw a horizontal line, and then essentially go from there, right?
From the opening of the day, from the
Sunday,
opening
week.
Mm-hmm.
Mm-hmm. My problem is gonna be that gap now, though, right?
The gap.
Yeah.
The gap.
I'm anticipating a gap, a big one.
So this week is gonna be a little weird anyway.
Very funky.
It's gonna be funky. So as much as I just referred to all this stuff, this week gonna be funky.
You're gonna throw it out the window.
Yeah, because we already know what's going on with this week. That's it's gonna be slow. It's also going to be it's gonna be slow, and it's got the addition to Tesla. So I'm expecting a gap up on this market this week.
Yeah.
So that we can kind of throw it out this week. And we still probably may be able to consider the opening price, because what'll probably end up happening is a situation like this where I don't even want to look at this chart. Let me see.
Corey,
We
Corey,
uh-huh.
do you know about the IG weekend, Wall Street weekend, right?
I don't.
Because you can look to see where's how it's going to open, whether the numbers are usually not accurate, but the direction is, and it's been pretty accurate ever since I've been using it. So I had to send you the link.
Yeah,
Figure
yeah.
out how to send you the link, and you could look at US 30 and see how it's going to gap. It's going to either gap up or down.
I think it's gonna gap up. And just looking at it right now.
Right now, after hours, right now is at like 30224. So it's gonna, I think that's gonna gap.
What?
On
After
US
US 30 right now is down 134 points, and it's at 30224, 30244. The numbers aren't accurate, but the direction usually is.
Okay.
So it's gonna gap, and according to this, it'll probably gap down, I think, because it closed at 30373. It's gonna gap down and then it'll shoot up.
Send me that link, Steph.
Okay, let me see if I can figure out how to put it in the chat. I mean, in the chat right now. Let me see how to, if I can figure out how to do it. Okay, copy. Let me see. And I keep it open all the time. So let me go to the chat. Okay, I think that's it. And like I said, the numbers are usually off, but the direction is right. Yeah, that's it. And I've been using it for like months and months and months, at least like 6 months, and it's been accurate each time. Not the numbers, but the direction.
Gotcha. So this implying it drops.
So those are the numbers. That's what it's trading at, behind the scenes on the weekends. It still trades. We just, our brokers are doing, we just don't trade it.
Yeah.
But it trades on the weekend. And this has been really accurate as far as.
So they're implying short.
Because it closed at 30373 on TradingView on Friday. And that's saying 30224 or 30244. So I'm expecting a gap down and then it'll gap up. I mean, a gap down and then a shoot up. That's what I'm expecting.
Can you see this on any other pair?
I haven't been able to figure out how to get to pairs. I just figured out how to get to S&P. I'll put that one in there, but I don't know. That doesn't look like it was trading much.
Yeah, that's the one I want to see. S&P.
Yeah, that hasn't moved at all. But let me see if I'll put that in there too. And I just figured out how to get that one, but that one hasn't been moving, so I don't know if it trades or not. Because it hasn't moved at all.
Have you made an account with them?
No, I just keep them open just like that. Well, I just keep US 30 open. I just figured out how to change to get the S&P 500. And I can't remember how I got it, but.
I've been thinking about opening an account with these guys anyway, actually.
Well, you can open a demo account and see how they trade.
I've been thinking about that just because.
But somebody put that in one of the Telegram chats about 6 months ago, and I've been using it ever since.
Okay.
And it's been pretty
active. IG market.
Yeah.
Okay, that's the S&P. That hasn't moved at all weekend, so I don't know if that one's trading or not. At the US 30 has been moving, but that one hasn't moved. It's his stayed exactly the same. But the US 30 one has been moving.
This implying it goes up, goes down.
Mm-hmm.
The other one gapped up.
This one implying that it's gapping up.
Yeah.
But that one hasn't moved, so I don't know what that one's doing. I don't know if they traded over the weekend or not. See, that doesn't really say weekend. The other one says weekend.
Gotcha.
So that one hasn't moved at all. I've been watching it all weekend, but it hasn't moved. But the US 30 one, you can see it says weekend Wall Street, and it's been trading all weekend. The S&P one hasn't, and maybe I don't have the right chart. Maybe they do have a weekend.
No, you on it. You on it. I'm looking at 3 different brokers right now, and it's about 24. Hugo's is 19. FX Choice is 20. Yeah, 29. What? No, 24. Sorry. So yeah, we're okay.
Yeah,
Osprey.
Like I said, that one hasn't moved, but the other ones, the US 30 one always moves. Like at 6 o'clock, when it closes, at 5 o'clock, I check it then. Sometimes if I'm still in, I check it because it's running all the time.
Hope y'all got y'all gas. Oil's about to go to 50. Ooh, okay.
All right, just want to let you know about that.
Yeah, that's good stuff. Definitely.
Well, it's important this weekend because of that S&P thing, and
yeah,
US 30 and S&P usually run together, but because of the Tesla and all that, I don't know what S&P is gonna do.
Yeah,
they might not follow US 30.
Yeah,
when it opens, but we'll find out in 9 minutes.
Yep. Well, I'm about to hop off, y'all. Let me send you guys the link for this team meeting. This is it right here, and then I'll come. Let me ready to go, so that way, if you want to watch it, it's there. And then, like I said, this is where your focus needs to be on. Don't do too much trading this week. If you do it, then and you win or lose, or you be in some crazy trade, then I told you already. And I said, so. McConnell says Congress has agreed to $900 billion Corona stimulus deal. Markets are going up.
What did you say?
McConnell just
Congress.
agreed to stimulus package.
Oh, okay.
The market.
Oh, okay.
Up.
Yeah, they're gonna go up, but they might gap down because the banks don't usually want to buy that high, so they might gap down and then gap up.
No, that after that move on Friday, they probably already in it.
They already in it.
Already in it.
They knew they was about to do this.
Friday? Shoot.
You know what? I had a good entry. I finally had a good entry on Friday, but I sold it because I was scared. I didn't know.
Yeah, they knew they were quick too, right at the end.
So I had a 0.02, but I have a small account. But I was scared. I was like, okay, I'm gonna stay in this thing, and it's gonna gap down and blow my account. So I got out.
That's why they did that crap Friday, because
that was the best okie doke ever.
Right.
Yeah, you the sell guy. I'm the buy person because I hate them sells. I like the buys.
I was in a buy. I was in a buy. I knew what they did.
I knew that was stupid crap.
It's just all good. Yeah, they already in it. They already made their money. They were waiting for it.
Yeah, they were in it. I was in it. I should have probably left it in, but I was like, okay, I jumped out at 4, but the market closed at 5. I jumped out at 4:51. I was like, let me get out of this thing before I blow my account.
Would have made $400. Or what is it, 40 pips? It was like 40 points or something like that.
I have a 0.02 though for S&P.
For the buy?
I had a buy, yeah, at 3,700.
Should have left that thing alone.
Yeah, I was scared. I'm still kind of new. I'm still learning, so I'm not brand new, but I'm new at trying to figure out how to trade myself.
I was like 36.80. 36.80 when it was dropping, and then got to 36.78 and said good night. Went in the opposite direction.
Yeah.
It's gonna fly.
It's gonna fly.
It's gonna fly. That's gonna be almost 3,800. Watch.
And what's crazy is we ain't even gonna probably be able to like get an order in.
Can't get in it.
We're not gonna be able to get into it.
You cannot get in there. The gap is gonna be so large that good luck.
Yeah.
Well, I'll wait until whenever and it starts coming down, I'll trade the gap when it comes back down to fill a gap.
Yep. That's the only way we're gonna be able to get into this one.
See, I'm learning.
I usually try to box off openers and then trade the breakout, but this time it's not even applicable. Can't even do it. It's too big. That's how Terry does it. How he did it.
Yep.
All right, guys.
Okay.
Wait, hold on. Is Noon on here? Who is Noon?
Noon?
Yeah.
Donovan said Noon is a robot.
I've been asking the same damn question.
Noon is a real person.
I know,
Yeah.
but how she always on here? Who is she?
Noon is Jeff's wife. Jeff Mama's wife. The mamas.
Okay, I still don't see her on here, but she's acting as if she's in here. Like, I'm sorry.
She is.
On the call?
She is not a robot. She is in here.
And she don't be saying nothing.
She's not on here.
She's not on the call, but she always.
No, I'm saying she's a real person. Donovan said she's a robot, but she is a real person.
Nah, Noon just be on it. That's I'm surprised you don't know Noon from the she was in the other chat we was in, Wale.
Yeah, I know her from the scalper chat.
Yeah, same one. Wale in there too.
Wait, who's in the scalper chat with us?
Stephanie.
Really?
Yeah.
Wait. Where my invite to the scalper chat? While y'all talking, where my invite?
Nah, you ain't.
I never say anything.
What was that? What's that, Wale?
You weren't with us.
I never knew what I was doing.
You weren't with us shooting in the gym. We've been out here, bro.
I've been out here too. What you talking about? Since 2017.
Who was in the mud though? All right.